Happy tax day, everybody. Can you really even say that? Happy Monday. Okay, it's hard enough even to say that, but hope you had a great weekend. Today is April 15th, 2024, and this is your Tax Day Monday market update. Last week was a big week, a lot of action. Let's recap day by day, and let's preview the week ahead of us. Before we get into last week, we will discuss the weekend events and specifically their impact on the markets. As always, I will stay away from any political or humanitarian side. There's plenty to say about that, but that's outside of the scope of these videos. I'll stay focused on the economic and market impacts, so I'm not ignoring the other impacts. I'm just leaving them for other conversations. Let's recap last week. Last week started off with a quiet Monday and Tuesday as far as market movement goes. Specifically, Monday had a sideways chop to it, and the tight trading range was really due to minimal catalysts, as I mentioned last week. Excuse me, there was much more to come, but for Monday, there was a New York Fed consumer survey, and the inflation outlooks rose for the 3-year look. The 1-year look sort of stayed steady. Again, not so much of a market mover. There really was little to talk about on Monday for a change. The Dow, S&P, and the NASDAQ all up or down less than 0.4%. Tuesday did see stocks gap higher, but most of the excitement was gone by then. There was the small business optimism report that I told you about. Not too much of a focus, but I contend it should be. Small business is the backbone of the economy. The report was disappointing, and that helped, though really did not cause the bonds to sell off. Thus higher yields. Say headwinds on stocks. So we also saw some broad selling in the mega cap tech stocks. Even Nvidia was down. Intel unveiled a chip that they say is going to compete with Nvidia's chipsets. 3-year Treasury auction was a flop. Fed head Bostic was a bit hawkish. Overall, as I mentioned, not too much on the macro catalyst. Some single stock news, but a slow day on the scorecard. The Dow once again hugged the flat line. The S&P up less than 0.25%, and Nvidia could not keep the NASDAQ from being up 1/3%. And then the week really got started. So the CPI report on Wednesday came in hot, and that was not what the market wanted to see. The summer rate cut was quickly written off. Yields spiked, and the S&P fell to multi-week lows. Iran-Israel rhetoric weighed on the markets too. We'll talk more about that. CPI and core CPI and even super core CPI, all too hot for expectations. The Dow was down a bit over 1%, S&P just under 1%, and the NASDAQ was down just over 0.75%. Note, by the way, that the reports that I read using words like that I just talked about those numbers, use words like tumbled for the numbers I just read. You have heard enough of these reports from me that this is not a tumble, as markets got set up for the PPI, but that's what the news is these days. Thursday brought a not as bad as feared PPI report, and you know how I love that description. Markets did bounce back some on that report, add in an Apple AI chip rollout, and markets did recoup much of Wednesday's losses. The Dow, not so much, but again on the flat line, S&P up 0.75%, the NASDAQ up almost 1.75%. Friday came and washed out all the gains. Catalysts piled up. Bad eco data from China. Big banks' earnings disappointments. Latest University of Michigan survey. Consumer sentiment was down. Inflation expectations up. The 1-year and the 3-year. Hawkish Fed speak, and the words hike re-entered the lexicon. Are you kidding me? A quick recap. We started the year expecting 6 cuts. Last week we were at 2 or 3 cuts, and by Friday they were talking about hikes again. And the markets are still within a few percentage of all-time highs. You got a lot to unpack in all that. Finally, possibly the straw that broke the camel's back, no pun intended, was the Iran-Israel reports. Again, second time in 2 weeks, but this time more notable. Intelligence reports reported actionable information that some kind of attack was imminent. Markets were not happy with all that, and red was the color. After visiting down 582 points or 1.5%, the Dow finished Friday down 1.25%. S&P was down 1.5%. The NASDAQ was down 1.2%. For the week, the Dow was down 2.33%, S&P down 1.5%, the NASDAQ down 0.5%. Friday did bring about a big sell-off in the financials, courtesy of the big banks. JP Morgan was down about 6%. CEO Jamie Dimon warned about inflation pressures. Please keep in mind, he also projected an economic hurricane and now has uttered the words 8% 10-year Treasury yield. Overall, the week was full of all kinds of action, inflation, earnings, global data, and of course, Middle East tensions that did in fact bubble over, to say the least, over the weekend. Let's preview this coming week. We've already seen retail sales and some earnings from Goldman Sachs today, Monday, and those were positive. We are also seeing a little bit of a bounce back in the face of the weekend action in the Middle East. It seems that the markets are not so worried. Even oil is steady, and that is the main tell we'll keep an eye on. We'll get manufacturing data this week, housing, jobs later in the week, leading economic indicators in the Beige Book. Keep an eye out for the news coming from that on Wednesday. And don't forget the Fed heads. We have a lot of them. Logan, Williams, Daly, Jefferson, Barkin, Mester, Bowman, Bostic, Goolsbee, and even Powell's going to step up to the mic tomorrow. I think the biggest thing this week should be, if not will be, earnings. We're not in the real heart of it yet, but we've got a good number this week, so watch out for that. Otherwise, we'll need to watch the Middle East and, of course, the Treasury yields. So that is the week behind us. That's the week ahead of us. Please come back on Friday for some planning ideas. Since today is tax day, we'll start on some post-tax day ideas. For now, please call with any questions. Have a great week.